Hey guys, doing a little follow-up video here. Get a lot of emails from some guys recently after I posted that last video, and to clarify my position, I guess I wasn't clear enough in the video. I'm not bearish or bullish on the market short term. I'm just calling it like I see it, the technicals. I'm not here to say that there aren't a lot of problems with this market. There's a lot of problems with this market. In fact, I have much lower target prices in August, September, October than we do right now currently on the SPY. In fact, all the indices across the board are obviously going to move together. So no, I'm not. I'm actually a little bit nervous about the economy here, but I also recognize there's a little bit of a bubble aspect to this market. I also recognize that there's a lot of firepower under here between the Fed and the millions of new day traders out there and hedge funds that are chasing performance and theme stocks and day traders. And I mean, I get it. There's a lot of firepower out there. So I don't expect a continuation collapse move to the downside. In fact, we've been talking for a couple of weeks about sideways movement. So wanted to point out a couple of interesting things too. I still don't think the NASDAQ has corrected enough of the excesses. And interestingly enough, if you look at a standard candle, sometimes I use bar charts because I think they're a little cleaner and I can kind of see, exactly where the highs are, where the lows are. But there's also what I use is called a Heikin-Ashi candle or Heikin-Ashi candle, and it kind of collects data from the prior candle based on highs and lows and volume, etc., and it extrapolates that data and creates the next candle based on that data. So it's a very good indicator of movement over the intermediate term. It's not as quick as regular candles and bar charts to see directional changes. Obviously, it's hard to use intraday per se, but over a longer period of time, it shows you a better description of what the market looks like. So the interesting thing here, let's just use the NASDAQ for example here. You can see a mix of red and green bars, obviously, all the way up based on closing prices and opening prices. You can see from this lower pivot area, there's 1, 2, 3, 4. So let's just start right here. 1, 2, 3, 4, 5, 6, 9. There's 11 red candles from this bottom pivot area. If we include this first one, we'll say 12. So that's 1, 2, 3. There's 6, 9, 10. Actually, I'm sorry. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 candles. Now, if you change that to Heikin-Ashi type candles, you'll actually see the waves a lot clearer, and it's very clean. So from the bottom, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, but you can actually see wave 1. Red Heikin-Ashi. Wave 2, red Heikin-Ashi. Wave 3, wave 4, and then we're probably headed into wave 5 to the upside. Potentially, right? Potentially, because I still think the NASDAQ needs to come back down and retest this channel here. But just going off the data that I'm looking at right now, unless something changes, unless we do a wave 4 and break down here, this looks like it's got an indecision candle here. What you're looking for continuation moves on the upside is no tail. A long body base with a wick and no tail. So when you see these, it's indecision. Now you have, look, every single one, no tail. 1, 2, 3, all these up, no tail, right? And then you have the indecision one, the little spinning top candle. That's indecision. That's indecision right here. That's indecision, where you have a long wick and a long tail. This one's less indicative of a bearish pattern or of indecision. It looks more bullish. But when you have a tail and a wick longer than the body, it's indecision. So obviously we close with some indecision on Friday. We'll see Monday how that pans out. But you can see the waves very clean on the Heikin-Ashi candles. SPY, probably the same thing. Very clear, right? You don't see that on the regular candles. You see a wave 1, 2, 3, 4, and now you're sideways. A little bit of indecision, positive green, but you're still sideways. If you change the colors back to regular here, you're not going to see 3, and then big move 1, and then 2, and then 3. You can be surprised what you see. It looks completely different. Where are my candles at? You have a mix, right? You have 1, 2 mixed in here, then you have a red one along here, another red one here. I mean, it's not as clean. It's not as precise. So add that to your tool chest. The Heikinashi gives you definite, more definitive descriptions and data on which way the market is headed over the intermediate term. So back testing this candle line here, I expect tomorrow morning. This is just going to be a guess here because obviously we're all guessing sometimes other than the data that we're given. I expect a pullback on an inside day tomorrow to start off with, and I expect us to open a little bit weak. I would say we probably open around 283.80, 283.90, but we'll see. We're not here to force the market into making decisions on which way we're going. We'll let the market tell us, and then we'll base our trading decisions based on what the market does. So just an interesting look. As far as the economy is concerned, I still expect, that I've been expecting for weeks, social unrest. I think that people are going to break the rules. They need to get out there and work. Restaurants are not going to be 50% capacity. They're going to stretch that 70, 80, 90. Social distancing will not be like like it's been drawn out by the government for people to, in local cities are not going to follow the mandates by the city. I think they're going to be. So I do expect a second wave. I'm concerned also with some, mutation of the virus. So being short is tough because what if they come out, at some point you can come out with news intraday that, Gilead, one of these companies has found a definitive cure, not one of these little, micro caps that we traded on Friday, but something substantial on that front, and you're caught short, you're going to get smoked. Just that being said, too, some bad data coming out being long is tough too. So that's why we're coming around in day after day to be pretty much predominantly in cash going into the next day. I do carry some stuff over, but just want to be cognizant of that fact that being short is not going to be as easy as you think it's going to be, and nor is being long. So APT, I'm kind of changing my opinion on this one. I still have a big position unless it shows me something more definitive. I'm going to give it 2 more days. Maybe I might even dump some, actually. I don't want to be too heavy on this coming into Monday. We'll see how it acts. I just don't like the big. It had a chance for some fall through intraday, and I don't like to see a move like that and then you pull back down to baseline. It's just, I don't like that action like that. I like this powering up, and then I like to see this, and then what I like to see after that type of move is maybe trail along here and kind of close at that 1530 area we talked about. That I didn't expect that to be breached, but a little concerned about that movement there. Might lighten up on some APT. No follow through with the chance to follow through, just like SPY had no follow through on the downside when it had a chance to follow through. So just my 2 cents on that. Nasdaq, I think, pulls back in. Just throwing some stuff out there. I'm bearish on Apple. I know you guys are going to be like, well, it's not acting bearish, but I'm just giving my opinion. Okay, I don't like this stock right here. I like Apple as a company. I just don't like this stock right here. I think it's very very vulnerable. In fact, I would expect it to be closer to the 270 area within a month or two. Just throwing that out there. We'll follow up with some more stuff later, guys, but that's just my opinion on the market here. If anything, I'm bearish market economy further down the road, and I'm kind of neutral here. Just my video is based on bear frustration, which I stick by wholeheartedly.